what I wanted to say is equity attributable to owners of the parent. So this is share capital. Share capital, it means those are the shares that they gave in, okay? And retained earnings, the profits that they found, distributed according to what somebody gave in, then they are saying, please, it has to go back to the equity. So that's the retained earnings. Other components of equity. Other components of equity. This can be what? Other components of equity. Other components of equity. This can be what? Mon, other components of equity. What can it be? Just think about anything that can be an additional to that. Other component of equity. Some. Other component of equity. We can think about anything to say. As we are four, we have a company. And then maybe one of us, Dorothy, thinks about his car or her car coming to, bringing it to be doing the work of our company, okay? So those can be some of the things we can think in those lines. So those are the equity part of it, equity and the liability. Then we have non-controlling interests. Non-controlling interests. What are non-controlling interests? Non-controlling interests. Find out from there. Find out. Non-controlling interests. Mona. Non-controlling interests. It was very low in 2006, but it went up almost times 2 this other year. Non-controlling interest is an ownership position in which a shareholder owns less than 50% of outstanding shares and has no control over that. It's also known as a minority. Yes. Me, there, according to the example, I'm minority because I can't control. I'm too far from the billions you have put in. Okay, so that amount is the one that the other components of equity. So it's not indicated as shares? No, it's not, because it's too minimal. Okay, it's too minimal. I remember the other time somebody called me to go and assist him in starting a university. So I went. When I went, I assisted him so many ways, and then I said, I will be one of the shares. Said, let me think over. I said, yes, because I'm assisting you. And not only that, despite I can have minority in your company, still more, I'll be one of the shareholders in the company. So I assisted him, he started it, and then when I went to him again, he was reluctant. I said, then I'm withdrawing. I'm withdrawing. Then I went out from it. What am I explaining? I want to explain to you the other components of equity. Other components of equity. Even if somebody can put in a 2,000, it is his contribution. It is his what? Capital contribution. Therefore, it's going to go on others. Despite other people like the Dorothy have put in 5 billion, him or her has put in a 2,000. It's a contribution on the capital. So those are some of the things that are put on equity and liabilities in the balance sheet. Then after that, we have the total equity. The total equity on the financial statement. After that, then we have the non-current liabilities. Non-current liabilities. Non-current liabilities. The first row is long-term borrowings. Long-term borrowings. Long-term borrowings. That's the first entry. And then on the same, let me ask you a question. Long-term borrowings. How much can you think, maybe us as a company, we borrowed? How much can you think? Just think of an amount. Just think on an amount that you can think about. 800 million. Okay. We think of it putting it to the capital, but it's a borrowing. Okay. So how are you going to write it in the financial statements? 800 million we have borrowed. Maybe we have bought something that is an asset. So how are we going to write it in the financial statements, and where should we go, which figure and how much? Just for us to be thinking aloud. Long-term borrowings. Doro. Sam. We have borrowed 800 million. That's the amount that you have mentioned, is it? And let's say we thought of it going to the to boost our equity or capital. $800 million.
So you were asking that in the balance sheet, where are we going to record it?
Yes.
Or it would be under the non-current liabilities, because it's a loan. It may also take longer to be repaid.
Okay. It's going to be in the liability side. How about it going into the equity? Does it talk any language to that? A liability it attracts interest, isn't it? Where is the interest going to be? Profit and loss account interest. It's an expense. Okay. But the figure itself is going to go in the balance sheet, but liability. Is it? Okay. So it's a liability, a long-term liability. Okay. Then we have tax, deferred tax. And then long-term provisions. Long-term provisions. What can be these long-term provisions? Long-term provisions. Long-term provisions. So we're saying on non-current liabilities, long-term borrowings that we're discussing, and then deferred tax, then long-term provisions. Long-term provisions. I don't know, maybe this can be, I don't know, maybe it can be something that we were given and then we're supposed to be giving back. I don't know. I don't know, but it's something to do with the giving out. And then we are supposed to see the next entry after lighting the total non-current liabilities. Then we have the current liabilities. After that, we have the trade and other payables, and then short-term borrowings, current portion of long-term borrowings, current tax payable, and then short-term provisions. So we are having the totals of our balance sheets after adding the total assets and then equity and liabilities. The totals should be the same, isn't it? That's how we balance the balance sheet. So the totals are supposed to be the same. So this is how we go about the articulation of the financial statement, and this is for the balance sheet that we have been given. We are talking about the 4 subtopics on the financial statement presentation, where we are talking about the articulation, financial statement, geography. We're talking about information on the financial statement. All those are supposed to be the the things that we are supposed to be talking about. So information that should be presented either on the face of the statement of financial position or by note. As we have already seen, we have seen that those that are on face are the property, plant, and equipment that we are having. Those are on the face of the financial statements. And then function within the entity, the operating and financial assets, inventories, receivables, cash and cash equivalent are those that are shown separately. Amounts, nature and the timing of liabilities, all these are shown on the face of the financial statements. But we have where we are supposed to show on the face of financial statements, but by notes, by notes. So we are supposed to show if we have other explanations. Do we have any notes in the financial position that financial statement of we were doing? Do we have notes? We don't. Do we have notes here? Mm-hmm. Okay. So, but we should not forget on that to say always we are supposed to explain what we have done to other non-financial managers and non-professional managers that want to understand us in connection of the financial statements. So our book states on every entry that we were explaining and that how we should go about it, and then also we should know them. This is the way how we should write the um, the financial statement in connection of balance sheet. Then we go to the statement of comprehensive income. Statement of comprehensive income. Format that is there on page, what page is this? Page 43. 43. Statement of comprehensive income for the year ended 31st December 2007. And then this is now between 7 and 8. That's the gross profit is just that minus that. And then after that, other incomes on the profit and loss account that were given. This is the 20,000 and 11,000. Then distribution costs. Why are we doing this? We are following the cost outline that we should know the information that goes into it, and not only that, the articulation of the financial statements, which means the how we write. Also, the financial statement geography talks about the same thing, which is what we are doing. And then we are supposed to write distribution costs. Distribution costs. And if you see there, you are going to see that whatever figure that we subtract is in brackets, isn't it? It's in brackets.
So then after that, we have administrative expenses that have been put. These are expenses for the administration, other expenses, share of profit of associates. You remember we have investments of associates. You remember in the balance sheet? Look at this one, share of profit of associates. So this can be expenses, is it? This can be expenses. Then profit before tax, that is that. Then income tax expenses. After that, we have profit for the year from continuing operations. And then after finding out you have loss of the year, profit or loss of the year in discontinued operations and continuing operations. What are continuing operations and what are discontinuing operations? Continuing operations and discontinuing operations. It's self-explanatory. Mona, discontinuing operations and continuing operations.
Operations, ongoing operations, and those that are continuing.
Yes, I've stopped. There are others that are not going to continue, others are continuing, isn't it? Yes, there are other operations that are continuing, but others do not, they stop, they cease. Okay? Sometimes, as Mona said, they are put on hold. Please, can you we should not do this expense. Please stop first. Okay? So these are some of the things that are discontinuing that cease and continuing that go on or continue. Then we have profit for the year according to the profit and loss account, other comprehensive income, exchange differences on translating foreign operations, available for sale financial assets. Remember, we also had in the balance sheet. Yes. Available for sale financial assets. Then cash flow hedges. Cash flow hedges. Cash flow hedges. After that, we have gains on property revaluation. We have revalued our assets and then we have seen that we have gained. This should not be, it should be land. And what can we say? Land can be revalued and appreciated, is it? But there are few items or assets that when revalued can go up. Then actual gains or losses on defined benefit pension plan, share of other comprehensive income of associates, income tax relating to components of other comprehensive income, other comprehensive income for the year, and the net tax. The total comprehensive income for the year, which is profit and loss to the owners or patent. The non-controlling interest. It continues the total comprehensive income attributable to owners on the parent and the non-controlling interest. Then earnings per share in currency units. So this is the profit and loss. that how it's done. So we have learned how we go about with the two financial statements in connection of the geography of it. Again, we have to go to another example, which is below, which is page what? The next page. This one is short. 44. This one is very short. Look at it, it's just there and it ends. So this is what we are saying to say. Profit and loss or balance sheet, it depends on how you present it, but this is the official way of presenting it, and not only that, it depends on your company. If the company is big, therefore, you are also going to have a long financial statement for that. We have the other example on separate income statements. Separate income statements where they indicate how it has to be done and how we do it. So this is how we go about with the financial statement presentation, and we should not forget the information presented either in the statement or on the notes. On the notes. So on the financial statement, I mean on the course outline, we have organization of information in financial statements, articulation of financial statements, information flow among financial statements, income statement geography. What can we say on the information flow among financial statements? Information flow among financial statements. What can we talk about? Information flow in the financial statements. We talked about the investment for associates, isn't it? But in the profit and loss account, we also had an entry in connection of that, isn't it? Dorothy, what are you going to tell us?
An information flow.
Mm-hmm.
For example, the balance sheet,
Yes.
the flow of information is according to the, maybe I should say, the items that are most valuable to the organization.
Yes.
And what the organization owns.
Mm-hmm.
And then
The bigger the owning, the bigger it is entered in the books of accounts, isn't it? That's what they're telling us. That when you are talking about flow of information in the financial statement, it's nothing apart from the sequence that is there, how we present the financial statement. And I continue.
the same as the statement of comprehensive income,
Mm-hmm.
they started with what the organization has as revenue.
Revenue.
So these are the maybe maybe we should say the treasure that the company has before it presents what it is going to give out, yeah, as expenses.
Okay.
And even on the expenses, they also differentiate on the operation expenses and administrative expenses.
So this is the information flow that they want to tell us in connection of that. Us as the financial reporters, we are supposed to know all this. How am I going to put the information for it to be understood? And not only that, you are the one that is supposed to explain to these non-financial or non-professional managers that you are working with or bosses that they want to find out from you about what the financial statements are all about. So you should know the information that is supposed to be put in the financial statements and even the flow of information in connection of the financial statements. So these are some of the things that we should know how it is written, because I know every organization has got its own, but us as the reporters, we should have the standard that is given to us. And we can always advise to say we should use the same standard, or we can lobby from our friends about the same financial statements. So these are some of the things that we should know. And here I'm going on the revision of what we have learned. What is the statement of financial position? What is the statement of financial position? Sam? Statement of financial position?
Sometimes it is referred as balance.
It's a balance sheet. Okay. In short, it's a balance sheet. Okay. Because don't get confused with these things, because sometimes you can say, but what is it? In fact, I've been talking about it when we were learning to say this is a balance sheet. The first example was a balance sheet that shows about statement of financial position. How about what is an asset? This we already know, an asset. For you to explain to me, you are supposed to explain a bit bigger so that we should understand that you know it. An asset. Come again?
When you just know them.
No, because Sam, an asset.
Asset? I don't know. Generally, identified as an asset is something that is value, that has a value. As well, it is a
I
categorized
think
tool.
these resources, you can either bring cash or other resources that are used by the company to generate income.
And assets categorized into two. There are fixed assets that have non-cohesive value for the company, and there are current assets that are near cash, and they have maybe shorter useful value. I don't know how to explain it, but assets, both fixed and current, are the pressures for the company to generate more income.
You wanted to add when you
I wanted to add the point you just saying that
Yeah.
they are categorized into two.
Mm.
There's the current and non-current asset.
But how about intangible and intangible? That's why I said you have to think and then explain. Yes,
Intangible assets, as you say, that intangible assets, these are like the copyright, and an intangible assets, the copyright, yeah,
I want
These are like assets. You cannot see them or changing, but they are there.
yes. No, the thing that I said you should explain to me so that I should really know that you know it, because I wanted you to clarify the fixed and current as well as tangible and intangible. You get the point. Give examples of fixed assets and current assets, and then also give examples of tangible and intangible assets. That's what I wanted you to explain. How about a liability? A liability. Liability. Liability.
These are owns that the company owes other businesses or individuals. It can mean a very long term or short term.
But be saying a bit louder because as we're saying, our friends online are also going to hear. So that's why I'm saying we have to speak a bit louder so that our friends will benefit because they are also in our class.
Oh,
Yes.
these are owings that the company owes other companies. It can either be long term or short term.
Okay. Liability, some.
the owns on debt that the company has. Loans or debt.
Examples of liabilities, for example, the long-term ones could be a plant which has been taken on credit and it will be repaid for a number of years. And another example could be bank loan. If that bank loan is going to be repaid within a period of 1 year, it's a current liability.
Okay, thanks so much because I want our friends also to be benefiting from what we are learning in class. And not only that, how about a share capital? A share capital? We have seen it in the financial statements, share capital. We talked about them anyway when we were learning the same period. Share capital.
Share capital is kind of capital that the owners of the company put together. Could be different in values, but together makes a share capital that is used to run the affairs of the company.
Mona, maybe you want to add a bit on that? No, it's fine. Okay. How about the reserves? What are reserves? What are reserves? 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 What are reserves? Because these are some of the wording that we can meet in our presentation of financial statements.
Reserves can be